Hey there, it's Trisha with Easy E-mini Trade, and I just want to go over a little bit more on the Renko entries from today and how you can use them to have an idea of where support and resistance areas are. I know I've talked about it in the past, but a lot of people tend to struggle when looking at the Renko charts because they're designed to eliminate a lot of the noise, which is great, but it doesn't mean that you can ignore or that you want to ignore areas where you're expecting price to react. And today's going to be the last day that I'm going to have the Renko recording available for anybody who wants the recording who doesn't already have it. So if you want it, easyeminitrade.com, and just click on the tab for Renko webinar recording at the top, and then I'll be pulling that down, and then I'm going to start registration tomorrow for an Ichimoku webinar that I'll do next week. So I'll send an email out once I get that info loaded, because I know a lot of people like to use that for higher time frames, and mainly this time of year, like if you're looking for equities at the first of the year, or trying to decide if you should get out of the positions that you're currently in by the first of the year, the Ichimoku is a great way for scanning. All right, so more on that tomorrow, but for now, let's go over some Renko stuff. Okay, so what you're looking at on my screen right now is NQ for today. Currently it's 12:30 my time, I'm Eastern on Thursday. And the chart here on the right is the one that I've been using with Gordon's handy dandy indicators, making it a lot easier for visual effects. And this is what yours would look like if you were just using standard indicators. And it's fine. It does not matter if you use the standard, you guys. If you want Gordon stuff, you can get it on my website. And this is the MACD here. We've eliminated the histogram on that, but basically we're getting a short possible short setup when you have the pink background and a blue for the buys. And so basically when we're getting closed above the super trend, if our histogram on the MACD is above 0, Gordon's is going to color blue. If you're using standard, the histogram is going to start plotting above 0. And Gordon's will mark the current entry price. So basically, as we're closing above the super trend here, the high of this bar is 15 even, and the entry, the way that I take them off the Renko, would be a tick above the high. So I can get in at 15 and a quarter or anywhere on this next bar below that 15 and a quarter. So as long as it's triggered at, like, price is traded to 15 and a quarter on this very next bar, and so let's say it pulls back to like 13. Let's see, the low of this bar is 13.50. So anywhere that it pulls back on this bar, if I don't want to get in right at 15 and a quarter, I can get in on, as long as it would have already traded through that 15 and a quarter to trigger the entry. Okay, so in looking at this, the buy was valid, and this was just now, not that long ago, right at 12:30. And what a lot of people struggle with the Renko is the fact that it does make it a little harder to spot congestion areas. So obviously this morning we had a wild, crazy market on the way up after our president had a tweet. But, you know, don't fret about that. If, let's say that you were short and the market took off, you know, that's what stops are for, you guys. We may have slippage getting out, but the stops are there to protect us, and you have to remember that. So just imagine not using a stop, and in a matter of, you know, less than a minute, it shot up, you know, more than 20 points. You got to have your stop in place, okay? So this is a ideal lesson for somebody who doesn't use stops, because now they're probably still sitting in their trade if they were short from this morning, just begging for price to come back, and that's no way to trade, you guys, honestly. All right, so this here we had a buy, and it was valid, meaning the histogram was above 0, and the buy on that would have been 92.75 or anywhere on this bar here, as long as it traded to 92.75. And resistance. So this is where I need you guys to practice. And if you have trouble, and this, I'm using the settings of 12 and 6 on the Ninja Renko for NQ. If it's a slower market, I can use 10 and 5 or 8 and 4. If it's a faster market, you can up it to 16 and 8 or higher, whatever you want. Just make sure that whatever trend threshold you're using, that the brick is evenly divisible. So you can see trend threshold 6, brick size 12. So this 6 goes into 12 evenly, right? So you can use 2, you can use 3, you can use 4, but using 6. So if you change it to 16, you would want to use a number that was evenly divisible into that 16 if you're going to use that as a brick size, okay? And that holds true on any instrument. All right, so let's just go to this buy here this morning. So looking to your left here, even though this was pre-market, to me, this is pretty easy to spot that you've got some resistance created back here, right? So anytime you see bars with a tail or something like this where it's, topping tail, bottoming tail, topping tail, that's looking like a congested area if you look at this on a 1 minute or a 5 minute or some other chart that isn't meant to smooth it out. So in taking this buy here, we would be aware that this is a possible area of resistance. And we already know around the round number, price is going to have some difficulty if you've spent any time at all with NQ. So that's around 8,400. And so in taking this, you would be aware of the area of resistance right above you. Now, I generally, around the round number, will use an area of support just under the round number and an area of resistance just above it and kind of stay out of that zone to initiate a trade. If I'm already in a trade, fine. But like I said, if you're familiar with NQ at all, you know that it struggles in those areas. And so this was the crazy move higher on a tweet, I believe. So nothing we can really do here because it was just way too fast to do anything. So then we just kind of wait until the market mellows out a little bit. And then you just kind of look to see where the reaction areas are. So this was a valid short here. And again, I don't think that you could have gotten in fast enough, but if you could have, then you just look to the left and you can see where you've got some of these tails over here. Granted, they're not back and forth, but this would be like a heads up in this general area where you're seeing all these tails where price might react. Here on this buy, right here, I would look over here on the Renko and just mark this general area here where we've got this reaction area and just be ready. If you're able to look at it on a 1 minute chart or a 5 minute chart, you're going to have an easier time spotting those congested areas. If you don't like to look at any other charts, then that's fine. And so you can see this general area holding again here. And then if I look over here, I would probably at least mark this general vicinity right here where we've got this little reaction here into the high of the day here. And this actually was an all-time new high at the time. And you can see these candles here. And then you can see price reacting in this general area here until it breaks out above there again. Anything here short, obviously you're going against the overall trend if you want to take it. And I'm not saying that the market was slow enough that you could have taken these. If the market was slower, this is going to help you for these types of trades, okay? So you look over here and you can see this general area here where price was reacting around 71.50. So looking here, you would anticipate that as a possible area where you can have some issue. So this buy here, not valid because our histogram does not agree. That means, and I'm using Gordon's indicator here, so the histogram is not above 0, so that would be a pass. Here, technically short is valid, right? So I would look over here where we get this last little area where we were getting some of these tails. So anywhere around these two areas right here and here, you'd expect a reaction. And you can see it does manage to trade through, not completely, but general area. So you would determine if you wanted to take that. That would be the area that you'd likely have to anticipate a reaction. And if it gets through there, then you would be looking at this area as a possible reaction. Then you look over here. And again, this is creeping higher into brand new territory. So anything that you're taking at this point as buys, you're going to want to pay attention to where the high of the day is, because this is the all-time high. And generally speaking, the market generally is not going to run away in new territory. It's going to creep its way higher. So in taking this buy here, we would look over in this area where we've got the high of the day and anticipate that as the reaction area. And then as it gives you a new high, just get ready for it to pull back on you, because that's generally what happens. Here, this short, looking at this short, right, technically valid, right? I got my pink background, which means the histogram's below zero. But look over here. We've got all this congestion here, right? And so a common area, if you look at where the start of the bars are and highs of some of these bars, can you see that this is a common area here? So I would be cautious in doing any kind of short into this area, just because this is congestion. And like I said, if you look at it on a 1 minute, then it's going to show some consolidation. And I'm not telling you go against the overall trend. Anytime we go against the overall trend, we know that we can run into some issue. This one here into the high of the day, I'd pass on, because literally you'd be taking it, the entry at the high of the day, and technically it is valid. Here for the short, and we actually did take this short earlier, but off of a 12 range chart. It was the 12 range got us in a little bit lower, which got us in under this area here, but technically valid as the short. And so looking at this area here where we had this last reaction, if I was taking the entry on the Renko, I would look at this little area here, take it, and then when price gets through it, you're pleasantly surprised. And then you would be looking at this area, gets through there. And then from earlier, remember we had the 71.50 area, and basically it consolidates in that area again before tagging the 200 EMA there. For the buy here, right? So we already know, looking over here, this is a congested area, right? We can see it here. We can see the bounce off that area here. So if we take this buy, we want to be aware that that's possibly a reaction area. Short here, technically valid, right? We look over here now at the area that was last holding. We can move this down here to the 68.75 area, or even, you know, down here around the low of this candle here. If there's numerous bars there, I would try to find a common area between bars. So here we've got this bar showing the open, this bar showing the low, general area of the low here, and we've got our 200 period moving average there. So in taking this short here, if I wanted it, I would be looking again to the left. And then if it gets through and you're still in, you're pleasantly surprised when all heck breaks loose below there. And any of these buys, right? So if we look at this from earlier this morning, so I'm just going to put a line there. So let's just see. I don't know what's there, but let's look back and see if we were paying attention to earlier, did that create a support or resistance area that we would be attempting these buys in? So let's just see here. So I'm going to just scroll back to whenever we were trading there. So it looks like here just before 10. So realistically, we can use that area that we've got marked, or if we wanted to, we can actually use up here, right? Because this area has a lot of reaction also. So I would probably mark this area, and then I would probably just mark this area here, and then probably just mark that until we got through it. So let's see what that looks like if we look at the areas where those buys set up. So you can see here's the buy here into that area that we just drew at 46.50, 46.75. It held. This one held as well. This one here, you can see that it got stuck in the same general area as this little area right here. So any of these buys into that area that we had that congestion this morning did not work out, right? And then same with this short area. If we look here where it last reacted here, and if we want to pull this down, we can. I'll just pull this down here. So we see the reaction here, then you get the short in that same area here, short in the same area here, and then short in the same. Actually, this one gets us in under. So this one looks a little better. However, at that time, you can see now we've got this reaction area here. So I would probably just kind of do this here, and then I would probably do this here, just get an idea where price was reacting. Doesn't mean you can't take the trade, but you can just have an idea of where the trouble lies if you're taking it. And like I said before, if you look at it on a time-based chart, sometimes it's a little easier. So this buy here into this area here, we'd use this 30.50, 30.75, and then we're looking back up to the 33 and change area. The short here, if you look over here, you can see these reversal bars, bottoming tail, topping tail, bottoming tail. So if we just kind of pick a common area in this spot here, we can, so I'm just looking for bars that have some confluence basically with either the highs or the lows or the opens or closes. So this looks like a confluent area here between bars, or next one would be under here, right? So if I take this short off the Renko, then I would be aware of this area here and then this one below at 16. And you just keep doing that over and over and over again. This is yesterday's high and close spot. And looking here on this buy, when we look over here, we didn't really have anywhere where we need to worry, like right here. I would probably get rid of this at this point and then pull this one down to this tail right here. And I would use that as the possible resistance area. And then you get through it. And so you just keep doing it over and over again. I definitely find it a little easier to pick out those areas on a time-based chart. But if you're not comfortable looking at a time-based chart, just look for those tails. Okay, guys, I hope that you find that helpful, and I will chat with you all later. Have a great day. And then, like I said, tomorrow I'll send out an email about the Ichimoku webinar. And as mentioned, today is the last day to get the Renko setup webinar. And if you already have it, no worries. It's not going to disappear. You'll always have access to it. It's just anybody who doesn't have it, if they want it, today's the last day. Okay, you guys, have a great day.